Okay, so a pollution tax, or what we will call also a Pigouvian tax, is a market-based approach. Now, the reason why we also call this a Pigouvian tax is because this is similar to an externality tax that we've talked about in chapter 3. Right? So say that every gallon of waste causes a $2,000 worth of pollution, or in terms of monetary damage. Right? Then we would say that a proper amount of the pollution tax will be $2,000 on every gallon of waste. And the idea is that if we charge the proper amount of tax, meaning the marginal damage done by the pollution, therefore this Pigouvian tax will result in an efficient outcome. Okay, so let's look at this graphically. Suppose that we know that every gallon of pollution causes a $2,000 worth of damage. Okay, so we charge that pollution tax at T1. So let's see how much will the industry choose to reduce. So remember, the industry starts at Q max. This is the maximum amount that the industry will pollute without regulation. Once you charge the tax at T1, then the industry will reduce from Q max to Q1. So now the pollution level will be the pollution level will equal to Q1. Okay, let's see why that is. Well, so here, right, starting with the last few units of or gallons of pollution, it is pretty cheap to reduce, right? So that's the marginal cost of reduction. And so for every gallon, the industry have two choices: either reduce the pollution or pay the tax. Right? Now, as long as the marginal cost of reduction is below the tax amount, then the industry, right, will choose to reduce the pollution. And so from Qmax here, the industry will continue to reduce, right? And they will reduce all the way up to Q1. Passing Q1, it will no longer be efficient for the industry to reduce, because after Q1, any amount that the industry like to reduce, the marginal cost is going to be higher than the tax. Right? And so for all the pollution from zero to Q1, the industry will simply choose to pay the tax as opposed to reduce the emission. Right? And so pollution level is at Q1, therefore, and then now what about total cost? So total cost of reduction equals E. Right? It costs the industry E, right, to reduce this much pollution. So F is basically what is avoided, right? That's the tax that is avoided, because if the industry did not reduce this pollution here, it wouldn't have to pay. It would have had to pay both E and F, the tax amount E and F here. But instead now, right, the pollution level is at Q1, so they must pay tax on that. And so the tax revenue for the society, right, will equal B plus D. Okay. Now, let's suppose that we made a mistake, and it turns out that the pollution level, or sorry, the monetary damage for every gallon of pollution is actually not 2,000, but instead it is 2,800. Okay. So now we must then increase the tax, right, in order for it to be efficient. Right? Oh, by the way, just so you know, by drawing this line here, well, we're basically assuming that the marginal damage curve, it is flat, it is a horizontal, and so now we just raise the marginal damage. Okay, so now we're essentially just to make the math simpler, we are assuming of a constant marginal damage, as opposed to earlier on in the handout that we're assuming upward sloping. Here we're assuming that the marginal damage is constant, horizontal. Okay, and so now let's go ahead and so let's see what happens. Right, so instead, if the tax rate is here, then the pollution level will equal Q2. Right, and the total cost of reduction, right, well, now equals C, D, and E. Okay, and the total tax revenue will equal, again, that's the tax rate multiplied by the amount of pollution. So that would be A plus B. Okay, now let's do a numerical example. So in order to do a numerical example, we have to flip the graph around a little bit. Okay, so now this is going to get a little confusing because the graph now we start. The definition of the graph changes. So now is pollution reduced, as opposed to here in the previous graph is a pollution level. Okay, and so here, right, we're starting at 0, and as we go from left to right, we are polluting more, right, all the way up to Q max. Here, we're starting with 0 reduction. So here is really Q max. Right? And then now we're saying, oh, well, how much did we reduce? So as we go from left to right, we are reducing more and more pollution. And again, the reason why we're doing this is because it is to make the math a little bit easier. We are drawing a marginal cost curve going up this way. Right? Okay, so let's suppose that now we have an MCR of a linear MCR now, right? 30 plus 2Q, and the tax rate is 110. So this is my tax equals 110, right? Let's see how much pollution will be reduced. Okay, so let's look at it going from this way. Now, remember, right? Every unit of pollution that the company does not reduce, they will need to pay a tax on it. So again, as long as the reduction cost, which is the marginal cost here, as long as that is below the tax rate, the company will choose to reduce the pollution rather than paying the tax. So the pollution reduction will be from 0 to 40. Right? Now, once you get to 40, then there's no more incentive to keep reducing because because to reduce, the marginal cost reduction is above the tax. So the company then it will be more efficient for the company to just simply pay the tax. Okay. All right. Now, so let's see how much pollution is reduced. Well, then 40 tons. Right? 40 tons is reduced. What's the total abatement cost? Okay, so total abatement cost is from here to here. So that is simply B plus C. Okay, so we can calculate that very easily. Here, B is 1/2 base times height. That's just the area of a triangle. Okay, now that's B. That's plus C as well. So C will be 30 times 40. Okay, let's calculate that. Okay, so this will be 2200 plus 30 times 40 will be 1200. So together, 3400. Okay, so that is the total abatement cost. Now, what's the tax revenue? Well, all right, so they are still polluting 60 tons. Right, 60 tons of pollution is still being polluted, and therefore they will still have to pay the tax on it. Right, so the total tax on it would just be D, right, and therefore D will be 110 times 60. 6,600. Okay. All right, so pollution tax is a market-based approach. Let's talk about some pros and cons here. The pros, it is efficient. The equal marginal principle has been achieved. Again, now, the important part here about equal marginal principle, or how do we know that it has been achieved? If the pollution tax is the proper level. So in order for the pollution tax to be the proper level, the pollution tax must equal to the marginal damage of the pollutant, or the monetary value of the marginal damage. If that is indeed the case, then we will say equal marginal principle has achieved, and we have maximized the net benefit from pollution reduction. All right, and why? And how do we know that? Well, if we look at this in both of these analysis, right? Again, that it really depends on if the tax rate is indeed the right amount. If the tax rate is at the same amount as the marginal damage of the pollution, then we have that the marginal cost of reduction equals to the marginal damage, both in this analysis here, also in both of these cases here, right? And the firm, right, voluntarily they will choose to reduce pollution at the proper amount there. Okay. Now, flexibility. So, the government charges the tax. The government does not mandate which technology or which method the firms has to use to reduce the pollution. Right, that allows the flexibility. So different firms. So say that some firm might be able to reduce pollution more efficiently using one method over another. Then it is or it does not require the regulatory agency to know that information. Right? So each firm can be flexible. Okay. Now, if the MCR is flat, then a small change in tax will result in a high reduction. What does this look like? So, for example, right, if we just take, let's say we take a MCR that is, a relatively flat like this. So then, if I have a small change in the tax rate from T1 to T2, right, there's a very small change. Right? The tax is slightly increasing, but however, the MCR is really flat. By the way, if the MCR is really flat, that means it's actually pretty cheap or a very low cost for the industry to reduce pollution, and the pollution reduction, right, would be really great, right, from Q1 to Q2. That is the amount reduced. Okay? So the effectiveness of the tax at reducing the pollution has everything to do with how steep the MCR curve is. Okay. All right. Now, what are the cons? So, with the pollution tax approach, right, the government have full control over the cost of pollution reduction, or essentially the cost of the pollution, right? However, it does not have control or precise control over the quantity of pollution reduced. Right? The company can charge, the government can charge the tax, and we know that by charging the tax, pollution will be reduced. However, it is very difficult to know exactly how much pollution will be reduced. Okay. Now, the second problem is that estimation of NCR is difficult. Right? So if you charge a tax, right, but it turns out that the MCR for a particular firm is too steep, right, then the tax might overburden the industry, and it will put the company out of business. Right? Or you might turn out that the company just pays the tax and doesn't reduce any pollution at all if the MCR is too steep. Right? Meaning if the MCR is if it's too costly for the firm to reduce pollution. Okay, all right. So that's it for pollution tax.